The weakening American dollar, that often causes inflation. A lot of people, people were getting so excited about gold there for a while. It's kind of fallen on the wayside. People are talking about commodity prices are going higher. And I know I have some thoughts, but what do you think about this whole inflation story? And is that going to cause rising interest rates? And what do you think?
Well, I think it's interesting in many regards, but you do have central banks saying that they will not be raising rates, and more importantly, you have had a very long period so far of where inflation has kind of underperformed, and I mean that by that 2% standard level. And the central banks seem pretty intent on allowing the inflation level to go beyond that for a pretty extended period in terms of the language. So I think if you do see inflation, it's important not to jump too quickly, but it could continue to run a little bit, and I think the central banks would allow that. So I think interest rates will stay low for a good period of time. But you also have a pretty big demographic involved where the boomers, if you will, they're not spending as much, they're trying to save more. So inflation might come down in that regard. Now you also have a big generation coming behind it, but not to the same extent. So there's potential there for inflation to be softer. You have technology, which is certainly driving prices down. I don't have a concrete answer about that, and I'd love to hear what you're thinking. But the central banks certainly have come out and said, we're willing to let things go for longer. So I think that's an important thing to listen for, language and reaction to that if inflation does go higher. What do you think?
I think you're right. I mean, the debt, the demographics all point to, and technology all point towards deflationary pressures. And the people that sort of talk about inflation, they're talking about commodity prices and that kind of stuff, and debt, which tends to be inflationary and over time. But also our economy is a lot less dependent on those natural resources than it used to be. And so I agree with you. I don't think that we're going to have that huge spike in inflation that will cause that spike in interest rates. I think what we are seeing is inflation in certain types of assets. Some people would argue that we're seeing inflation in stock prices. And I think we're certainly seeing some assets some inflation leak into certain stock prices. We're certainly seeing a lot of speculation in certain things. You could call that inflation for one way to look at it. But I would agree. I don't think inflation is going to be a major problem whatsoever.
It's also too the components, right? Like food prices have definitely gone up. So there's one element, but central banks tend to look at things where food and energy prices are stripped out. So is that real or not? Rent is a big one, certainly in the U.S. And I might get my number wrong, but I want to say it's about 40%. Rent prices have been coming down. So maybe that's a big variable, and maybe it's time to change up the inflation metrics. But
there's always been that argument that the economists are measuring the wrong things.
Well, I can tell you when I go grocery shopping, I pay more. So I find it inflationary. But you also have a lot of groups that probably don't want to see higher rates. And that includes consumers who've borrowed record levels. You have governments that have borrowed at record levels. Again, the lower U.S. dollar, that low rates certainly help that. So that's a positive. There's not a lot of people who really... who you'd think would want higher inflation to bring rates up. So if everyone's kind of hunky-dory happy where we are now with low rates and low inflation, I think we're in a good spot. It's what happens if something changes there too. So definitely something to consider. And the one other variable I might add to that is there is, as a result of the pandemic, a fair bit of cash that's on the sidelines. That might be a factor too, with stimulus checks and government spending that might bump it up a little bit more than normal. But again, that's the real quagmire, and with relating to rates.
I certainly think that the central banks want inflation. It's always been the way to bail bad policy decisions out. I certainly know that when I go to the butcher, meat prices are higher. Definitely. That's not necessarily the fact that the farmers are making any more money, but there are bottlenecks being caused by this pandemic and the lockdowns, so it's not necessarily structural inflation. We might get some boost, and I think the central banks will definitely look past that.